Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on euro currency. So as usual we have prepared the weekly report. Although this week geopolitical tensions were in the center of the media reports, headlines, some statistics, speech of the Jerome Powell in the beginning of the week. But we think that the major events have been missed slightly by media focus. We suggest that most important things and information we've got from the few moments. First is the banking statement, and had been released this week. I mean, the Bank of America, Morgan Stanley, and some other big banks have prepared the earnings reports. It brings a lot of information. And the second is starting of the tax period in the United States and auctions on the United States Treasury debt. So results of all this stuff together have become the really major topic for discussion in this report that we have prepared. And recent conditions clearly show that tension inside of the United States economic system is rising. So it's become really boiling pot with the problems that start coming on the surface. And you could see it, for instance, in a recent drop of the Nvidia shares, more than for the 10%. You could see massive sell-off by the global funds on the stock market. You could see this in a sell-off by insiders, the big companies, Oracle, Amazon, and some others. We have posted on our Telegram channel this information. So you could see the results of the auctions and the yield on the 10-year bonds, for example, that it's coming to the 5%. So that all this stuff is just signs and a reflection of the problems that you see currently in the economy of the United States. And we have taken some in-depth look at this situation and have considered it. Speaking about the technical side, here guys, actually our trading plan barely has changed. So although on the monthly chart it might be a really interesting situation in May and after, but for now we could say just two things. First of all, our suggestion that market should get the support around 106 area that we have made last week now was correct. It's just because if you remember, here we have the strong weekly confluence area and a COP target. I will show you the picture that we have discussed last week, so recall this discussion of this confluence area in COP, and we said that, well, despite that sell-off that we've got, here market could take the pause and response on this action. So next weekly target stands significantly lower, so you can see it around 104.30 where it stands the weekly oversold area. But first I would consider an area around 105.50 by two reasons. First of all, because this is monthly yearly pivot support one and it has really vital importance from a technical point of view, because as you know, breaking of the pivot support one, especially yearly pivot support one, means that market is setting the new downside long-term tendency, and the overall this journey could be finished not only on the parity but actually below the parity as well. 90 even is our long-term target, as you know, but this will happen a bit later. On the common week, as I said, 105.50 is the pivot. And also if we'll take a look at the daily chart, take a look, next downside targets also stand around the same area. We have ABCD target 105.40 and butterfly target 105.17. So this will be important for the 1-2 weeks probably, because market, as you can see, hasn't turned down yet. But the start of the week we will be busy with the same scenario and the same trading plan that we have used on the previous week. If you remember, we talked about upward pullback that we intend to use for taking the short position. And on Friday, we said that it's a bit too early to consider downside, taking the short positions, just despite that we've got some significant downside action on Thursday evening. By the some signs that we have identified, if you remember, some grabbers have been formed on the 5-time frame chart, suggesting that further upward action. And these grabbers are still stands in place. So if you remember, we have grabber on the 5-time frame chart of the dollar index here. It's first moment. And that led us to still keep watching for the two levels since 107.10. This is 5-time frame chart on euro currency, 107.10 and 107.40, which is maybe more attractive. It's just because this is stronger. It's a confluence area, some kind of the confluence of 50% resistance. This is previous lows, so it's more reliable. And this is one reason. The second reason is that on the lower time frames, on the hourly chart, as on the euro currency, as on the dollar index, we've got another minor bullish grabbers. It's also have been formed on Friday. Yes, these grabbers do not suggest that market has to reach these targets. Their targets stand closer, right at this top. So I mean minimum target. But still, they provide some necessary background supporting the bullish context right now. So for example, here we easily could recognize and suggest this might be butterfly to the upside, right? So, and they also point that, well, at least these grabbers are valid. It is a bit too early to say goodbye to our bullish context. So everything still stands the same, and this is valid, and that's the reason why, at least in the beginning of the next week, we'll still be sitting on the hands and waiting when the market could reach some high standing levels. Once it will happen, if it will happen, we consider our chance for possibly taking the short positions there. So that and two words that we have on the technical picture. Let's keep watching and see what we will get.